Good morning, I'm Kristen Folletti and welcome to News Desk on SiliconANGLE TV for Thursday, June 6th, 2013. This week, IBM made an estimated $2 billion acquisition of Softlayer. With me now to discuss the implications of this move is Wikibon Chief Analyst Dave Vellante. Good morning, Dave.
Hi, Kristen.
IBM has promised Wall Street $7 billion in cloud revenues by 2015, and the recent Softlayer acquisition is another step towards delivering on that commitment. But Dave, IBM already has its own cloud offering called Smart Cloud. So what does this Softlayer acquisition say about IBM's existing cloud service offerings?
Well, it says it probably wasn't going to get them to $7 billion by 2015, or at least it wasn't going to do that in a way that observers would say it was really a true cloud model. I think that when you talk to IBM over the last couple of years about their cloud offerings, it was always kind of muddled as to what it was. There was a little bit of cloud washing going on in my view. There certainly was a lot of private cloud in there. It was sort of a mishmash of services and infrastructure as a service and software as a service and platform as a service, and just really was not clean. It was clear that it wasn't built from the ground up to be cloud. So I think it really underscores that IBM needed a pure play cloud offering in order to meet that promise to the street.
What specifically was so appealing to IBM about Softlayer?
Well, as I say, I mean, it is what I would call a true cloud. I mean, it's built from the ground up to be cloud. It's a public cloud. It is Amazon-like in terms of its self-service, and it's growing very nicely. It's a sizable business, probably 300-400 million, maybe even as big as 500 million this year, growing at a very nice clip. So it provides a lot of revenue. It's got 20,000 plus customers. Softlayer does a lot of dedicated hosting, though, and it does so in a way that's highly automated. So a lot of its customers use bare metal services and choose not to virtualize, even though it offers a virtualization service. But its real appeal is that they've highly automated the delivery of those services. So it's very Amazon-like in its self-service capability, but it actually in many areas offers greater degrees of granularity than Amazon. So I think those factors combined with the notion that Softlayer really appeals to a lot of cool new companies, a lot of small businesses and mid-sized businesses. And as I say, it could be a growth engine, a platform that IBM could use to build out its cloud services. Yeah, I think makes it actually a really good fit. The reported price is $2 billion for a $500 million company. That's not an unreasonable valuation. If you look at companies like Rackspace, and IBM will blue wash Softlayer and take that thing upwards of $2 billion over the next several years, in my view.
Dave, as you know, a lot of people feel that the infrastructure as a service market is a race to zero, and that doesn't sound like something that would be appealing. So why would IBM even want to participate in such a low margin business?
Well, its former CEO and the gentleman who used to run the services business, Sam Palmisano, once said that no matter what business you're in, you're going to get commoditized. And I think IBM sees that in services. IBM has a huge services business. It's the global leader in services, but it sees the Amazon effect really commoditizing the services business. And so, it's interesting what you're pointing out is a race to zero, and everybody talks about that. But I do think that there's real opportunities to make money here. IBM is all about value add, and what IBM is going to do is really take, in my view anyway, that platform of that Softlayer platform and really build out services on top of it and accelerate the pace at which it can deliver those services. So it will bring, much in the same way that Oracle does, a lot of its own technology, software technology, to that cloud and add value to that cloud and sell that value very hard. So for example, IBM's got a huge analytics business. It will start delivering those analytics in the cloud in a big way. And even Amazon, everybody talks about Amazon, how it's so low margin. Amazon's going to make a lot of money on the cloud, in my view. Yes, in a sense, it's a race to zero, and everybody talks about the hardware being commoditized. But Kristen, I'll tell you, I've been in this business a long time, and ever since I've been in this business, everybody has talked about hardware becoming a commodity, and people still make money on hardware. And the reason is because the pace of advancement in technology for compute and storage progresses so fast, and costs drop so fast. So there's always margin to be made there. Now, granted, it's under pressure, but I think that there's no question that IBM can add value on top of Softlayer, and it's not just going to be a pure play infrastructure as a service. It's going to add services on top of that.
Mm-hmm. What kind of impact do you see this move by IBM having on the competitive landscape?
Yeah, so it's a big move on the chessboard, no question. I think that, as we said earlier, it underscores that IBM had a gap to fill. And as we've talked about before, you've got Amazon as the both the gorilla and the cheetah in this business. They're both the disruptor and the big incumbent, probably do $3 billion this year. And you've got Google making moves over the last week or so, and certainly Microsoft Azure announced $1 billion in cloud business. Now a lot of that business they're counting is Microsoft software that they're selling to other cloud service providers. But still, Azure as a pure play cloud, does pretty well. And so you've got those big three consumer giants spending a lot of money in that space. And now, of course, you've got IBM with a pure play cloud. The big question is, can IBM scale to the level that those other three can? And I think it's going to be interesting here. I mean, I think there's a lot of pressure on Amazon and Google and even guys like Facebook to spend less on capital infrastructure. So I think those guys are going to meet in the middle. IBM's obviously got a huge, base of business that it can drive into the cloud, and it can, replace super micro servers with IBM servers. So there's some supply chain leverage. In other words, software will increasingly, I'm sure, use IBM gear, which everybody's making a big deal out of that. I don't think it's a huge deal. And then you've got sort of the OpenStack crowd, guys like HP who's betting on OpenStack. I would put IBM in that OpenStack crowd as well. They're going to go hard in OpenStack. And then you've got kind of Dell in there as well, even though it just pulled back recently and it's offering its own OpenStack cloud. And then there's Oracle. So you've got kind of the system vendors doing their own thing, either like Oracle with its own sort of proprietary stack, and or others like IBM and HP trying to use open platforms. Then really interesting trend is you've got VMware and EMC. And they are really the ecosystem play. They really stand unique in that regard. EMC has this big Velocity Partners program, and if you look at the list, I mean, there's dozens of cloud service providers in there, from old line service providers like CSC to new emerging companies like ViaWest and everybody in between, like Data Dimension or Dimension Data and Rackspace itself. So you've got that ecosystem play that's quite interesting. And underneath it all, you've got OpenStack, you've got Apache, which Citrix donated its cloud stack to Apache. You've got Red Hat playing in there. So the bottom line in all this, Christian, is you've got a very crowded cloud space. It's a very fragmented, and there are many, many clouds. And I think we are living in a world of heterogeneous clouds, and that is going to be with us for quite some time. So then the bottom line is, the big question is, what's the degree of lock-in that these companies have? They all talk about how open they are. Trust me, it's all about the degree of lock-in. Amazon has a degree of lock-in. It's easy to get data in. It's hard to get it out. VMware's got a degree of lock-in. And that is ultimately going to determine how much money gets made here. And I think that everybody's talking the open game, but the definition of open is moving. It's changing. So you're going to see OpenStack as a big theme at companies like HP and IBM. But at the end of the day, they've got to have some degree of lock-in, either direct like Oracle, Amazon through its API, or just by layering services on top and doing a great job competing. So I think it's a crowded field, and the cloud is starting to get real in the enterprise.
Well, Dave, it looks like that's our time for this morning, but thank you so much for taking the time to see us.
Thanks, Kristen.
And still to come on SiliconANGLE TV, which carrier wants to buy Hulu? And a new MacBook Air on the way. But up next, Wikibon senior analyst Stu Miniman checks in with us from the Dell Enterprise Forum in San Jose.